We represent the most important use case for the US dollar hegemony around the world. We build kiosks in Africa that facilitate the usage of USDT and so US dollars. We work with bodegas in Central South America. We are present with boots on the ground, building infrastructure for the US dollar from the ground up in all the emerging markets. And the interesting thing is that there is Tether there, and basically there are the BRICS. And I believe that USDT in this moment is representing the last stronghold in support of the US dollar in the emerging markets, when everywhere else we're seeing a very big push for de-dollarization of the world coming from the BRICS nations.
Why don't you do your work out of the United States of America if the underlying asset is our dollar?
That's a great point, but the reason is that if you go outside the US and you meet 1,000 people in the streets and you ask them, would you prefer to hold the US dollar or would you prefer to hold your national currency, they will all choose dollar. So actually in the US, you have 15 ways to pay people around, right? You have Zelle, Cash App, PayPal, you name it, right? Debit cards, credit cards. You can take loans out of credit cards. You have bank accounts. You have 95% of the population that is banked. Outside the US, there are 3 billion people that are called unbanked or underbanked. They don't have access to standard financial systems. They don't have any ways to pay, and they're desperate to have the dollar. Right. So as any company, you have to find your product market fit, and that is the unbanked for us. And we created a great business that is helping the United States buying back all the T-bills that we can. We have more than $115 billion in US treasuries. We are 19th largest country. We are not a country, of course, and holding T-bills.
I think everyone is going to have a digital currency wallet, whether it's inside of a bank account or independently, and we build the backwards compatibility to the existing financial system.
Fair or unfair to call it like the PayPal of crypto? Do you like that or you don't like that?
It's a good analogy. So we make it easy to use your debit card. You can use your bank account. You can use your PayPal. You can use your Venmo, Apple Pay, Google Pay. Our goal is to connect every single payment method across the world to make it easy for people to participate in this new crypto economy.
And you think it's ultimately all turns into a stablecoin situation?
Well, I think stablecoins are a really important part of our financial system. $27 trillion moved in the last year, greater than Visa and MasterCard combined. And what we're seeing is more and more companies looking to build on this infrastructure. We think it's an internet-driven payment method that you're going to see all across the world. And if you think about the United States, we've been a little bit behind. Real-time payments has taken years to get rolled out. We actually think wallets could help skip that technology jump, and stablecoins are going to be a very important part of that.
If stablecoins and the dollar just effectively get digitized, does that crowd out the Bitcoins of the world, or does that make Bitcoin more valuable?
Well, I think stablecoins are the most important trading pair. It's denominated in U.S. dollars.
By the way, for those people who may not even know, because I'm sure there are people who are watching this going, stablecoin what? I mean, we talk about stablecoins as if everybody understands what's going on. You want to do like a quick
It's $1 on a blockchain. It's $1 on a blockchain. And essentially, if you remember what happened with telecoms, it was really expensive to place a long-distance phone call. And then you had Skype, then you had Zoom. You had all this internet-based technology for placing, doing communication. Same thing will take place for money, and that's essentially the blockchain. And so stablecoins are just a digitized form of the dollar that's put on a blockchain.
Need those other coins.
No, I think this is a whole range of different crypto assets that you're going to see ultimately on chain. Bitcoin was the origin story of cryptocurrency, so I still think it will play an important role. You can liken it to gold. It's akin to gold. In terms of a market cap, we're still quite early relative to something like gold. We have a whole new makeup of investors that are coming in. Over the last year, we saw the ETF approved. Now we're seeing within bigger companies thinking whether they put it on balance sheet. We're looking at central banks that are now considering holding Bitcoin. Pension funds might decide to put an allocation. You have to look at it as an asset class.
What do you make of the Bitcoin Strategic Reserve and also this other fund that's actually going to hold other cryptocurrencies?
Yeah, so I think, one, America should be the leader in this technology. We want to be the leader in financial technology. America should assert its dominance here. Now, when it comes to the Bitcoin Strategic Reserve, I think Secretary Bessent had said this is going to be acquired in a cost-neutral way to the taxpayer. And essentially, we're sitting on a bunch of Bitcoin. The first step is not to sell it. And we should have a policy in the United States around how to deal with these different crypto assets. We actually disposed of Bitcoin and lost billions of dollars to the taxpayer. So actually having a policy in place, I think, makes sense.
Okay, the taxpayers should own Ripple. Like, that's a good idea?
I think there's going to be a whole different range of crypto assets, and it's up to the investor to decide based on their risk tolerance.
No,
doing
the
their own
investor,
research.
I'm saying the taxpayer. I mean, we've had lots of debates about free markets and the idea that the government is incapable of doing anything, right? Like that is actually the sort of libertarian view.
Yeah, but
that
staying
the
in
DMV
low
is terrible, and the post office is terrible, and everything is terrible. We are incapable of making an investment in anything.
Staying in low income, fixed income at 2% is its own problem, isn't it?
So if the question is, if we are incapable of making good investments, right? That's what we've said we are.
I hope we become capable of making good investments.
But you're making a bad investment by staying in fiat-based.
Yeah, well, I think we need to have a strategic asset allocation, right? And I think ultimately, if we're holding on to these assets as a result of forfeitures, we should have a policy in place. It's that simple. And so we need to decide our policy. We're not going out and acquiring these assets. We're just saying the assets that we've acquired, we might as well make the most of them.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have the Tether CEO acting like he was invited to the White House. But he says he's battling the bricks when it comes to de-dollarization. And we know he is telling a fact. And if you notice, they didn't ask any questions when it came to the bricks. We get absolutely no news. And then he brings up banking the unbanked, buying back trillions of these T-bills, 115 billion. And yes, guys, you heard that correct. If Tether was a country, it'd be 19th largest. You can't make this stuff up. If you don't think that these central banks have their hands on Tether, something is definitely wrong with you. You definitely sleep. It's time to wake up. And remember, the Crypto Teacher told you. And we have MoonPay co-founder and CEO says that everyone is going to have a digital wallet and how important stable coins are. The digital dollar. And we know with smart contracts, they're programmable, being able to tell you what, when, and how to buy, and you have 3 to 6 months to spend them or poof, they're gone. And we have Andrew trying to confuse the masses, and that's the reason why people don't invest. Now, we know it's a difference between utility cryptos and stable coins, and Andrew tried to lump them all together. And if you know nothing about crypto, you'd definitely be confused. And then he said, should the taxpayer be owning Ripple? Now we know when it comes to the strategic reserve, the sovereign fund, they clearly stated the taxpayer would not be paying. It would be money that was already forfeited and then plus whatever they get in the future. And we know Andrew already knows that, but of course he's trying to confuse the sheep. But he doesn't ask, why didn't the government keep that Bitcoin instead of selling it? We know the government has its hands all over Bitcoin. And remember, the Crypto Teacher told you. Now we have Scott Besson asked about his detox comments when it comes to the market. Says we don't have to go through a recession, but he said something that went over my head. I had to listen to it like 3-4 times. He stated that he wanted to go through a smooth transition and handing off the baton. And he snuck in that fourth industrial revolution. And because it seems like he's rambling when he's talking, don't forget he's a George Soros guy. He is very smart, and don't forget he's definitely a chess piece. And remember, the Crypto Teacher told you. And we have Kramer says Trump dumped the stock market just off a social media message, and that's your 401ks and RAs. And we're looking at about $5 trillion off the stock market. And we see Trump clearly doing the work for the Fed. The same way Tether is doing the work for the Fed, we clearly see Trump is doing that. Don't forget, when they were buying up all these stocks, we know BlackRock was doing the work for the Fed. So the Fed always keeps a hand to move the agenda. And remember, the Crypto Teacher told you. And anytime the market is headed down, we know we get a little bit of truth. Not all the truth, but we definitely get a little bit of truth. And we keep hearing about a recession, even though, we've been in a recession. We're in a Great Depression, but all this money printing, all this government spending was eventually going to come to an end. And right now, yes, we're pulling back, but this is just a correction. The crash is definitely coming. Don't forget, guys, they printed 80% of all money in existence in 2 years. I want you to wrap that around your mind. 80% of all money in existence in 2 years. So they knew inflation was coming. So they raised the rates the fastest ever in history to fight the inflation that they caused, which is clearly destroying this legacy economy so Trump can build this fourth industrial revolution. Whether robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And I'm going to use Scott Besant's term. They're going to be handing off the baton, smooth transition for this new digital economy. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
You say that when we're in a period of detox. You used that word on CNBC last week. Is that a euphemism for recession?
Not at all. It doesn't have to be, because it'll depend on how quickly the baton gets handed off. Our goal is to have a smooth transition. But I tell you, Sarah, the easy thing for us to have done would have been to come in and just keep this massive spending level going. And it's unsustainable, but could we have kept it going for a year, 2 years, maybe even 4? Maybe, but you're risking a financial calamity. So, we are trying to get this tax bill done. We are controlling expenses. And when we get the tax bill done, so if you can change the trajectory, up revenues, up economic growth, hold expenses flat, or do the unthinkable and cut expenses, then that's a pretty good trajectory on growth. And if we go back to the model in the 90s, that's exactly what happened. We'd see interest rates come down, we'd see the private sector take up the slack from the government, because right now we have excess employment in the government, and those people can be moved to the private sector.
We had a monthly call for the CNBC Investing Club in the middle of the stock market, in the middle of it. I sensed a positive move. I wanted to get excited, but you know what I had to do? I had to hold my breath. Because when this market's getting a head of steam going, you know what you can bet on? The president will post something rancorous, dispiriting, and confusing, and the market will immediately get put through the meat grinder. Wouldn't you know it? That's precisely what happened, and it set off a firestorm of selling that burned through the rest of the session. Dow ultimately tumbling 537 points, S&P plunging 1.39%, NASDAQ plummeting 1.96%. And you know what? It can all be traced to a gratuitous message on his social media platform that said that April 2nd tariffs are going to go on. Not that anyone thought they wouldn't. Now, if you didn't know any better, you'd think that the president saw the market starting to make a comeback, decided to nib it. But this really is the Walmart White House. They never stop trying to give us everyday lower prices, except it's our 401ks and our IRAs that are going lower. What I think President Trump doesn't understand right now is just how easy it is to send this market down. It's become ridiculously fragile over the trade issue. And there's always something that goes wrong, especially when you have a president who regularly gives us new negatives because he's mad as hell, he can't take it anymore.
President Trump's favorite policy tool, and he can't help himself but use that. But the only hope here is that if they do settle on just using reciprocal tariffs, because a lot of governments around the world will be quite happy, or not happy, or at least be forced to reduce their tariff rates, and then you have the law of comparative advantage, which plays itself out. All of us agree on that. The problem is that I think that even Secretary Besant privately probably agrees on that. But I think that the president is so hell-bent on tariffs as a policy that he can't help himself but use that. But the bigger point here for me, Carl, is this, that the American economy over the last couple of years was artificially juiced up by very heavy government spending, by running deficits that no country in the world has been running. And that was unsustainable. And the idea that America could go on that way and nothing needed to be changed, I think that was just not correct. So in a way, the correction we're seeing in the markets and even in some of the spending patterns, I think was inevitable given this bubble we had in American exceptionalism and in government spending out there. Problem is that because of tariffs, everyone thinks that the only reason the market's weak and the only reason why confidence is slipping is because of the drama over tariffs.
Going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're going to get more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 Kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.